Crazy move. Welcome back to the channel. This is Celsius stock. Celsius stock is up right now 14.5% in one day. That's huge move. Runaway gap. It's taking off. What is this? The what moving average is this? This is the green 100-day moving average. Super happy. This one, they have earnings coming up. The only news that I found was that Celsius jumps ahead of earnings conference presentation. They're doing a presentation at a conference from executives. Well, who knows what that is? There's no news released, but that's not the point. The stock was oversold. It was at the 30 RSI. Fine. The other reason I was interested in Celsius, of course, I had no idea that this stock would pop. I'm happy that it did. It was oversold. It was near a Bollinger Band, but it finally hit the right price for PEG ratio. It actually made a lot of sense. What did it hit? 3.65 on the price to sales, 25 price to cash flow. When you compare the growth, this thing is growing roughly 20 to 25% per year. And you compare the PE, it was finally there where it was attractive, like a Peter Lynch style stock. From a technical basis, it was oversold. So this will be a great company over the next 10 years. It'll pop. Who knows how much it'll pop? I have no idea. But whenever it's oversold, like I said in the previous video that I made on Celsius, I lever up. When it's oversold, I lever up. Now I'm going to reduce some leverage. I have a little bit of leverage left. But Celsius right now is notorious for dipping, popping, dipping, popping, dipping, popping. I think, I don't know if this is a bottom. I sure hope it is, because this stock is beat up. But it was a PEG ratio of 1, which means the growth was 25 and the PE was 25. The PE went even lower. But Celsius has a bright future ahead of itself. Over the next 10 years, it's going to grow more than double digits. So buying it here is attractive. Over the next few years, I think this will be $100 stock. So every time it gets really beat up, I lever up. Now I'm just going to try to end up in shares, and I'm going to generate free shares every time it dips and pops. Every time it dips, I'm going to buy options and call spreads. And when it rallies up, I'm just going to roll into shares and then keep the shares for the long run. That is my favorite way. I like to use leverage when it's dipping. Look at this 1,000-day moving average, this yellow line. Anytime a stock is below the 1,000-day moving average, I'm interested. And it's still below the 1,000-day moving average. Last time, let me get rid of some of these noisy data points. If we just looked at the 200, we'll make that one green. If we just looked at the 200-day moving average and the yellow line, which is the 1,000-day moving average, anytime we're below both, it's very rare, but anytime we're below both, it's a good value. Technically speaking, anytime we're below both the 200 and the 1,000-day moving average, it's a good time to consider the value. And what you do is you go look at the financials, you go look at their earnings. Is this a good business? Is this a growing business? And Celsius is, in my opinion. Not advice. No one can give you advice except your personal financial advisor. So automating this would be interesting. Buy at the 1,000-day moving average. Buy at the below the 200-day moving average. That would have got you in really early. Unfortunately, too early. Maybe buying below the 1,000-day moving average. A percentage, and then dollar cost averaging. Maybe if it's when the stock is below the 1,000 and every time it hits a low RSI, every time it hits 30 or below in the RSI, buy a little bit. That would be kind of cool. Let me do, like, if you waited for the 1,000-day moving average and then bought every time it was below 30 on the RSI, you would end up buying probably all of these dips. If you used options, you can sell puts. That would be interesting, because then you know the volatility is high. So maybe that's the way to do it. I'm going to put a link down below. I'm trying to figure out a way to automate all of these trading strategies, and there's 2 platforms that do it, Options Alpha, and then we're reaching out with Quantum Trades, trying to see if they can help us out. Quantum Trades link demo. I'm running a demo right now, actually, with Quantum Trades. I think it already logged me out, but Quantum Trades is setting up its software to do options and stock trading. And I have a demo running. They're going to have a new platform release coming out soon, and they're going to allow people to use their own settings. And I'm trying to set it up so that I can do below the 1,000 day and then low RSI, fire off a trade for me. So we'll see how that goes. The other stock I wanted to mention, iqiyi stock, has been on fire. They actually had earnings and it was bad, but they recovered today. So that's a really good sign. What was the expected? The expected estimate was 3 cents. They reported -8 cents. So it's good to see investors looking past that. If we look at Seeking Alpha, I'm going to look at iqiyi. I'm going to go see what the analysts are saying now, because they may have updated the earnings. So 26 for this year. Okay, all the 2024 numbers are done. We're now looking at this year only, 2025, 26 cents, then 24% growth for next year, 33 cents. So according to PEG ratio, the company would be a good price even at 22 PE, and it's trading at 8. This company is expected to grow 22 to 24% year after year, and the PE on this stock is only 8.8. So according to valuation, this is too low. So that's why I like this stock. The other reason it was too low is it was at tangible book value. So I like this as a value stock that will grow. I am super levered. This is also in my small account challenge, which I'm talking about in Twitter. And basically, I'm going to see if I can expand really, whatever I can get out of a $1,000 account, and then lever it with options, turn it, go to stock, lever it with options, go with stock. This is my first trade for the year. Let's see what happens. Hopefully this thing takes off, and then I'll have some videos on the small account challenge. But those are the 2 stocks. There's no news on iqiyi. It's just the earnings and people digesting the earnings. But yeah, Celsius up big today. It looks like it's a short-term bottom on Celsius, and then iqiyi is recovering from the sell-off it had yesterday because of, negative quarter. I believe it was expenses, but we're looking for the future. If you're investing in stocks, you want to have at least a 3 to 5 year outlook. According to financial planning, it's supposed to be 5 years. So you got to think long term, so these companies can grow their earnings, and that's how you make the most money. Buy low, own it. Buy low and own the business. Let me know if you have any questions, and we will talk to you soon.